95% of traders lose, but if you can master this supply and demand strategy, you'll be among the few who truly make it. And this course is your chance to actually beat those odds. And if you want this strategy to work, don't skip anything and focus closely, because by the end of this guide I have created a quiz to challenge you to prove if you got what it takes to trade this strategy. So here's what we'll cover inside this video. Firstly, what is supply and demand, and how to draw the zones, how to identify the zones, and by the end I'll give you my personal trading strategy that I actually use in the live markets, plus a quiz to check how well you've absorbed everything. So what is supply and demand? It's how buyers and sellers interact in the markets. A demand is where more people want to buy than sell, which pushes price up, and a supply is where more people want to sell than buy, which pushes price down. Pretty simple, right? Here's an example. Let's say price reaches a level of demand where the big banks and institutions have placed massive orders. Then it reacts. Those reactions leave clear signs on the charts, and our job is to spot those signs and trade with the banks and never against them. And once you understand how the big players trade, you can make a lot of money. Here's an example of a demand zone in action. Notice the bearish candle that forms before a big push up. That candle is your demand zone, a zone where price is likely to react from. Because price left so many leftover orders here, it wants to come back and fill them, giving a reaction. That is the sign we look for to enter the trade, trading alongside the big players who are interested in these areas. Okay, but how do you actually find these supply and demand areas? Well, if you look at the chart and spot where price has reacted strongly to the upside or downside, when you find that area, you mark the candle just before that big push up, which is now your level of demand. Mark it from the highest wick and the lowest wick just like this. Pretty simple, right? Well, not really. Not every zone is valid and not every zone is going to win, but let me show you how to spot high probability supply and demand areas, zones most likely to react strongly from, giving you clear signals to trade with the big players so you can have a high win rate and a high risk to reward ratio. So the first thing you need to keep an eye for is big fat momentum candles. This way you can see where price has a lot of big money in, and this is how you can spot your supply and demand zones. So here's an example. You can see 3 bullish engulfing candles right here, and right before that push up you have a bearish candle, and that's your demand zone. Take your box tool and mark it from the upper wick to the lowest wick and then extend it to the right. Now this is where the big banks are looking to enter from, because there are so many leftover orders here. This zone acts like a magnet for the market. Now when price decides to come back to the zone, it gives a reaction, and there are 2 ways you can enter these zones. Firstly, you put a limit order, which means when price reaches this box, your broker will automatically enter you in the market. Or secondly, do it manually. Now I always do it manually because you never know without confirmation if the zone is going to hold or not. So what I look for is a reaction from my demand zone, which is a sign that the big players are now ready with their orders. Then once I see a bullish reaction from this demand zone, I enter. Before an entry confirmation, I need a strong bullish engulfing candle just like this here. So you need to look for those good reactions. So the number 1 confirmation you need when trading supply and demand is having a reaction from the zone. Now, yes, I did already go over that, but it goes a bit more in depth. And what I mean by that is your reaction from the zone is not allowed to close inside the box or go through the box, because that means the big players are not interested in the zone anymore, and it is giving bad signs. So what I look for is a wick inside the zone giving an actual reaction, just like this and not like these. Now the second confirmation you need is having completely untapped zones. Let's take this for an example. As you can see, if you look just here, price has already tapped the zone, which means the big players have already taken some orders from this price and they have no reason to come back. Now yes, price can come back and give a reaction, but since it's not that strong anymore, it could just break right through it. So the strongest zones are the ones that are untapped by any bearish candles on a demand example, and on a supply zone example, your zone must not be tapped by any bullish candles. And the reason your zones must be untapped is because the big players already got in from that price. So when it wants to come back down, the big players aren't interested in the zone anymore. Only the retail traders are, who then get faked out. And the third confirmation is consolidation. Zones are much stronger when they form after a period of consolidation instead of coming straight from one big move. Why? Because consolidation means buyers and sellers were battling for control, and during that time, the big players were stacking up their orders. So when price finally breaks out of that consolidation, it leaves behind a zone packed with leftover orders, making it way more reliable when price returns. On the other hand, zones that form from just a single straight line move often don't have the same strength, since the market didn't spend enough time collecting orders there. So to recap, the 3 confirmations you want before entering a supply and demand zone are a clear reaction that does not close inside or go through the box. Secondly, your zone must be untapped before entering. And third, a zone that comes from consolidation. So if you have your notebook out or anything, you can just quickly pause the video and write these down, because if you can master these 3 confirmations, you'll instantly filter out a lot of weak setups that most retail traders lose money on, already putting you ahead of 50% of traders. But if you really want to be in the 5% who succeed, you need to watch this next part of the video where I'll explain my personal trading strategy that has given me some insane results. You know the basics already, how to draw the zones, how to identify them on the charts. But let's be real, that's not enough to actually trade supply and demand. So I'm about to show you and teach you how to actually trade it. Now, most people who only wanted the basics of supply and demand have clicked off the video. But for all the serious traders who are still watching at this point, I want to share my personal trading strategy with you. My strategy is based on supply and demand, of course, but I've optimized it in a way where the big players actually feel FOMO, aka fear of missing out when price comes to my zone. So they have no choice but to push the price in my direction, and I just ride along with them. So the secret concept I use with supply and demand is liquidity. Let me explain. Liquidity in simple terms is where all the leftover orders are stacked in the market. All the stop losses are placed under or above liquidity. So when that level gets swept out, then the price likes to react. So when price comes back to a zone with liquidity, it tends to react strongly because these orders get filled. And zones without liquidity, well, the market can just ignore them and your trade might fail. So I've marked up 2 demand zones right here. Both look good, but the only difference between them is one has liquidity and the other one doesn't. Let's see what happens. Price comes down to the one without liquidity and it loses. Then it comes down to the one with liquidity and it wins. This was like a little trailer to my strategy, but now let me actually explain how to combine this concept with supply and demand so you can achieve what you initially wanted from this video, which is to learn a profitable trading strategy. So I explained both of these trades right here, but we're not going to talk about this one because we're going to focus on the one with liquidity. Now, what you need to understand is that liquidity does not become valid unless it takes out its own high or low. So let me explain. We created the demand after the strong push up. Now we have created a low, which is our liquidity. But without price breaking this high, this liquidity is not valid because price doesn't confirm the trend. Now, as you can see, price has now broken the high, which makes this trade now valid. And now big banks and institutions are looking at this demand because you can already imagine how many stop losses are placed under this liquidity. And when that area gets swept out, price likes to react just like this here. Now, 2 quick tips for liquidity as well. It has to be within a distance. So if you had liquidity like this, it would not be valid because liquidity is too far away from the zone. And also the liquidity needs to be at least minimum 2 candles. And what I mean by that is, let's say for an example, you had a liquidity like this. It would not be valid because it's just one single bearish candle, but you need an actual low, minimum 2 candles, and this here is an actual low. Then it took out its own high, then it gave a perfect reaction, and then it won off the zone. So 2 minimum candles in the direction of your zone. So that was everything you need to know about liquidity. For the summary, firstly, liquidity is not valid unless it takes out its own high on a demand example and low on a supply example. Secondly, liquidity needs to be in distance within your zone, approximately 30 pips on JPY pairs. And thirdly, liquidity is minimum 2 candles in the direction of your zone. Now you understand what liquidity is and how I combine it with my supply and demand, but you still don't know what to look for. So let me go over a few examples to show you what to look for, finding those high probability supply and demand zones. So I've talked a lot about demand zones, but here's an example of a supply zone in action. Firstly, what I look for is a strong push down. The last bullish candle before that push is your supply zone. But before I look for this supply, I need a level of liquidity, so let's wait for that. Now we created a level of liquidity, but this is not valid unless it takes out its own low, so let's see. Now this trade is valid in all areas. All I need price to do is return to the supply zone and give me a bearish reaction. Now everything is great and price reacts perfectly from the supply zone. And just to show you I'm not exaggerating with this strategy, let me show you. You have another supply zone here, which one? You have another supply zone here, which one? You have another supply zone here, which one? And you have another supply zone here, which one? I mean, come on guys, this has to be convincing enough to show you that this is one of the best supply and demand strategies out there. Okay, now without glazing the strategy, let me show you another example of a demand zone in action. We look for big bullish momentum candles and then we mark the bearish candle before that big push up, just like this. Now technically this is what I call an accuracy zone, but don't worry about that yet. For now, just treat it as a normal demand zone so it makes sense. Now we need a level of liquidity, so now everything looks good. All we need price to do is break this high for liquidity to be valid. Now everything looks great, perfect. Price just needs to return to my demand zone. Just like this, another bullish reaction, and once again price flies off after topping the zone. Well, I believe you now have all the information you need on supply and demand to at least go test this yourself. And of course, you can always come back and rewatch the video or ask something in the comments. Alright, but now it's time to put everything you've learned to the test. This is your chance to see if you really understand supply and demand and prove you've got what it takes to trade it like the big players do. So, are you ready? Let's get right into it.